Hello there, how you doing? It's Joe and Darren over at Urban Hillsides Real Estate here for another thrilling edition, I always say, of Real Estate Reality. Our take on this week, what we've been doing, what we see the market doing. We're trying to keep you informed. So if you love what we're doing, follow us, like us, tell your friends about us. We really need the support. All right, thanks so much. How you doing, Darren?
Doing good, man. Doing great, Joe.
Great, great. Well, guys, look, we're going to do the usual. We're going to look at mortgage rates. We're going to pick out a topic. This one Darren picked out, and I think it's a timely one. Very early, but it is a timely one of forecasting 2024 with a very good source from C.A.R, California Association of Realtors. So we'll go through that. We'll look at solds in the last 7 days, actives that we feel are a value or interesting for people to look at. And then we'll also look at the local market itself. And those are the communities we serve mostly in Northeast Los Angeles: Silver Lake, Echo Park, Los Feliz, Mount Washington, Highland Park, Eagle Rock, Montecito Heights, and so on. So yeah, we've got a big show. And we're going to try to get it done in 45 minutes to an hour. So what else, man? Oh, of course. Hold on. Let me get that darn thing. Bear with. Hold on.
Chat about our
You should
topic a
not
little
treat
bit later.
any opinion expressed by Urban
There it
Hillsides as a
goes.
specific inducement to make a particular
That's
investment
right.
or follow a particular strategy, but only as Darren Hubert and Joe
There it
Cloninger are
goes.
real estate agents at Avenue 8 under the Urban Hillsides brand. All opinions expressed by Urban Hillsides or guests on this video are solely their opinions and do not reflect the opinions of Avenue 8. You should not treat any opinion expressed by Urban Hillsides as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of Urban Hillsides team's opinions.
All right, there we go. Let's go on to the market snapshot, and that really starts with mortgage rates. So let me get over to Mortgage News Daily. That's what we refer to. And let me share that screen. All right. So let's go ahead and move to mortgage rates and look at the 30-year, which most of us refer to. And the latest is, wow, 7.6, according to Mortgage News Daily. It's really, really ticked up there. The graph is a graph. Wow. We can look at the regular rates, or the other rates, rather. Let's see. There's 30-year fixed at 7.6, 15-year fixed 6.89%. 30-year jumbo is at 7.6, and let's see, 5-1 ARM 7.08, 30-year FHA 7.05, and then finally the VA 30-year 7.06.
Yeah, not much range in there at all between all of those. Sometimes we get
No.
fluctuation based on economic conditions, but they're all right in a tight pocket.
Well, I know you usually point out like the arms as some help, but yeah, it's pretty much there.
It's not, yeah, and one of the things they've done in this video, we're gonna play for you in a little bit about today's topic, is it's talking about how there's a little bit of a change in perception on elongating this higher interest rate period. Again, to try to control inflation. That's what it's all about. But we always talk about the persistence of the economy in the past year in this rising inflationary environment, more than doubling over the past year, yet still the economy continues to thrive.
Yeah.
So, yeah, all that's coming into play. This is a great forecast, and it definitely is tied to interest rates, which we start every show with at this point, because that's central in what's going on.
All right. There we go. Let's move on now to, let's see. We'll move to our topic, forecast 2024. And
so I will say it's great that we have a video For someone like me, I love stats, and everybody has different perception. But this is a half hour of like crammed in stats. We're not going to go through all of them. We're definitely going to give you the video. I think it's super important, and I'm really happy that a valid source in the California Association of Realtors came out with this so early, because there's so many people sitting on the fence waiting for something.
Yeah.
Typically lower price points, lower interest rates, and man, this video is really good at identifying how they think that's really going to play out all the way into next year. And that just gives people a lot of time to really think about making plans to determine if they're going to make a purchase or not.
All right. Well, let me just get set here. I will go ahead and put this in the comments. This is a public link. And yeah, as Darren said, it's 30 minutes long, and there's an even longer report. But yeah, certainly check it out if you have interest. I thought it was really good as well. There we go. Okay. All right. Well, let me make this just a little bit bigger.
Yeah, so we're going to play a little bit of it. The longest segment's right in the beginning, about 5 minutes. Then we're going to jump around to a few spots. But again, we'll give you the whole link if you want to follow up with it.
Okay. All right. Well, let's check it out. Here we go.
We're going to give you a little bit of a Cliff Notes version of the full-fledged forecast that we'll be going through tomorrow in all of its gory detail, and just kind of summarize where we're at in the marketplace and the economy and where we see things headed on the basis of kind of current news. Of course, we just had the Fed that met and decided to do nothing. And so we'll talk obviously about interest rates and their impact on the market and where we see that headed. And all of those things. In general, I would say that we're relatively optimistic that things will improve as we move into 2024. And we'll talk a little bit about why and how we're already starting to see some of that materialize in the marketplace right now. First and foremost, I think it's important to point out that even with all of the uncertainty, with the challenges, with the higher interest rates that we've seen, and even though we've seen sales that have dipped over the course of the last couple of months, we still haven't seen sales fall to the low levels that we hit last winter. Now, when you look at pending sales and where interest rates are, I think it's possible that we won't have that V-shaped recovery and that sales will remain relatively tepid over the next couple of months. But I do think that low water mark of 235,000 that we hit at the end of last year is probably the lowest we'll see things go. And again, we actually have rebounded at least a little bit from those very depressed levels that we were at towards the end of last year. The other thing I think that is important to point out is we don't see a big uptick in inventory from distressed sales. So there's a lot of reasons why the fundamentals in the mortgage market look a lot different now than they did back in 2008. And I think first and foremost amongst those is the fact that people are still paying their mortgages on time. And we know that there's a lot of folks that are locked into the lowest interest rates of all time. If you look at all of the underwriting criteria, FICO scores have been very high for the last decade. Vast majority of people are coming into the market with money down, with documented incomes, with fixed rate mortgages. So their payments are pretty much set in stone. And of course, most of these folks are still paying their mortgages on time. So the most recent data we have through June shows less than 2.5% of mortgages in California are currently delinquent, meaning that 98% roughly are being paid on time. And of course, you don't throw your keys back to the bank or foreclose on a home that you're current on the payment on. The other data point that I think is relevant is that the vast majority of homeowners out there actually still have home equity, both as a percentage of homeowners and actually the value of that equity. And I think that's another strike against a major surge in distressed sales, because again, not only are you making those mortgage payments on time, even if you get into trouble economically, financially, what have you, you're in a position for the most part to be able to sell that home on the open market without taking a big loss or needing the bank to come and take over that home with an NOD or something like that. Now, I think this is good from a fundamental standpoint, right? We're not going to have a bunch of distress, plummeting home prices and things like that, but I think it will also, be one of those things that just means inventory is going to stay that much tighter as we move forward. And of course, I think that's probably the limiting factor when you think about the housing outlook for next year is not that rates are high, but rather even at the fairly lackluster level of housing demand, we still don't have enough homes to put those, that smaller number of buyers into. And I think that's going to be the thing that makes the recovery relatively slow. One of the things that we're already seeing in the marketplace is that sales are low, but prices are trending up, which also kind of implicates supply as being that limiting factor. If it was all housing demand that was driving the show and rates that were scaring buyers off of the market, you'd see sales that were down and prices that were also down. But if you look at this chart, you can see the prices have pretty much been trending up for the entirety of the year, at least on a month-to-month basis. We didn't get back to those all-time high price levels that we hit last year. So up until the last couple of months, we were still negative year to year, but over the last 2 months, we've actually seen prices that were even up relative to those high levels of last year. So we both had a strong seasonal bounce in home prices this year and actually have now clawed our way back to those levels that we were at when rates initially started to go up last summer and last fall. And we're currently at a roughly $860,000 median price. And again, I think this suggests that it's not demand that's the problem right now, even though there's certainly just a mathematical reality that buyers don't qualify for the same amount of home as they did last year, and some folks have been priced out of the market. Again, this is still suggestive of too much demand relative to very, very limited levels of supply. Now, this is obviously something I think that's good for homeowners and people who are prospective home buyers who maybe have been waiting around for prices to go down or the foreclosure crisis to see that, waiting has only resulted in both higher prices being paid at even higher interest rates. And I think that is something that we can.
All right.
Yeah.
Some comments on that.
So much packed data here. Gosh, if you're in the, I want to put this on our website with a link, man. It's just really, really good. I don't, he said it. I don't even know that I need to comment on it. I'm just going to fill some other, really said it well, clearly stated. I'm going to discuss some other things between that and the next little segment we're going to jump to before we open up that next segment. So, broad economic outlook is strong, wages growing, people are spending, inflation is still a little bit of a concern, housing affordability is just below 20%. We're nowhere near where we hit. We were low teens back in 05, 06, and 07. So we're not in that range yet. It's important to compare that. But because we're still seeing such a strong economy, as I started by saying earlier, the importance of looking at this so early, so far in advance, is that they think they're going to prolong. And he talks about and shows charts about data because the Fed publicizes their predictions for future Fed funds rate. And they've moved those up. We're now at 5.5% Fed funds rate. They were predicting 4.5%, at least a 1% drop by next year. And their last meeting, they moved that up a half point. Which means they're dragging out these higher rates because of the strong economy, because they're afraid inflation's going to come back. Higher wages equal higher prices consistently. They talked about the labor market being such a relevant component of inflation. And I think we're all feeling that if we're going out into the world and spending money anywhere, everything is more expensive. And we always talk about, particularly around construction and housing, it's product, because product relates to labor, but just labor straight up has just grown exponentially so much. Economy next year, slower, maybe a tinge of a recession concern, but most likely slower. They talk about 1% growth next year. We'll see what happens. We're at a 2.4 month supply of inventory. Super low. Strong seller side market still.
You know what surprised me when he said the average house is like 860,000 across California.
Yeah,
That blew me away.
statewide, sure. And it's such a big
Yeah.
state, and there's varying ranges.
Yeah.
Yeah, there's like this is such a good video.
Mm-hmm.
All right. And he talked about something that we talk about. Here's one thing. 60% of homeowners have 4% or less on their interest rate.
Yeah.
So they're disincentivized to sell. And we've brought these things up, but they're there. He summarizes them well.
Yeah.
They're disincentivized to sell because they'll get a higher rate. A rate needs to come in that's a little closer, from maybe 4 to 6, 4 to 5.5. Some of those people then might step up and sell and go buy something else. They're also disincentivized because of capital gains. There's it's the highest rate of 14% of owners are above the threshold capital gains. That means 14% of owners are above 250, and in many cases 500,000 in profit they would get out of their house. And so a combination of rates and the potential of paying taxes on the capital gains. People are also staying in their house much longer. We talk about this, and it was just the normal language for us for a long time. The estimated time. People get a 30-year mortgage, but they're in their house for 7 years, right? Maybe you should consider a shorter rate. But now, for the sales this year, the estimated time in the house is 12. That's the highest it's been in a long time, or as long as they've been tracking it. I don't remember exactly which one, but 12 is the first time I've heard that number. Wow. So let's jump into that next segment then.
I have to say, so far, we do this every week, tracking the market, and it sounds like we're pretty right on. So that made me feel
yes, we are. We're not off here. No,
not at all.
Yeah.
All right, let's go on to the next here.
Move into that's available for sale, and you see this kind of reflected in this all-time high for folks that have stayed put in their homes longer than ever before. And I think this is leading to a market that, although you have buyers that are waiting for the good deals, it's actually becoming more and more challenging. Again, prices are rising, inventory is very low. Even at 7% interest rates, the typical home last month, or at least the median transaction, went pending in less than 3 weeks. So homes are still selling very quickly. We still see the market very, very competitive. We have almost half the transactions last month closed above list price. And so again, kind of illustrating just how even at this relatively low level of housing demand, it's still far in excess of sales. That being said, I'm optimistic for our members because I think consumers really need us. Even with the market as competitive as it is and many homes selling above list, we've also seen about 30 or a third of active listings that have had to do some form of price reduction. So it's a market environment that really necessitates expertise to navigate, because on the one hand, prices are rising, inventory's low, but sellers aren't as firmly in the driver's seat as maybe they were when rates were at 3%. The other thing I think it is important to point out is that there's a lot of nuance to the market. You have a lot of buyers that have been.
Is that enough on that one?
Yeah, that was great. I do think it was important just to get the perspective of the overall dynamics and what's triggering it. First-time home buyers, more stats. First-time home buyers, 36% of the market. That was interesting. All cash sales have risen tremendously. Almost 28% of sales are all cash. Certainly, we have identified that houses that have potential, particularly even need more work to get up there, that market has not been as active. And that's because combination of interest rates and then lack of experience, if you're an owner occupant, of getting that house up to par, has created opportunities for house flippers to come in and buy those with cash. And they're getting it, they're not paying 7%. Some of them are paying with hard money, which is in the 10% plus range, but it's still for a short term. 20 says, that's the other one that really got me. They showed a chart of new homes coming online, right? With talking about lack of supply and a lack of inventory. There's a chart in there that is showing cities in California. Oh my God, I think we're 50 times higher than any other city in California. In Los Angeles, we have 27,000 ADU construction projects going on. Huge number. And that's really how they're adding a lot of houses these days. They didn't give the number of apartments online, but that's a lot. And there's no other city on that chart they showed that even came close to that.
Right.
Wow.
Wow.
Population came down in California, and this is also relative to availability. In 2023, they're saying, and they expect it to be flat next year. They do expect it to level up. So maybe we can go ahead and jump to the next one now. In the 27 minutes. There you go. You got it.
Let me try to open this up. Hold on. Oh no, I think that's all I got. Okay.
Okay.
This is what you wanted, right? Just this page.
Yep. Yeah. That has the
Great.
stats. That is the official forecast and percentage of where they expect things to land. So on this page, a drop in volume of 22% is what they're predicting will end 2023 with. Lower volume, 22% down. And in 2024, they expect a 22% rise in volume.
Right.
So we'll come back on volume next year. Affordability, they're predicting, is going to come down a few more percentage points to the 17% range, which obviously means prices are going to go up. A predicted price increase in 2024 over 2023 of 6.2%. And in the end, as he said in that first segment, we went on a decline in the middle of last year, which ran into early this year, but we're going to ultimately be flat or slightly above to finish out this year compared to last year even though we went through a period of a dip, we've been on a rise. And their expectation is the year will end with a 6% interest rate range. And that's definitely going to be determined based on where inflation goes and how the Fed adapts to that.
Yeah.
So stacked with data, but man, I mean, buying a house is just, you have to have somewhere to live, but it's good to know what to expect. See a little vision into the future to help you make a decision.
Yeah. Great stuff. Okay. Let me go ahead and turn out of this. Anything else to add to that, Darren, or we're good on that?
No, good.
All right. We will move on now to solds, and we'll talk about it in the form of Northeast Los Angeles first. Just bear with me here, guys. Okay. Let's see. Screen. Hold on, boys. Let's see. Oh, here we go. All right. Okay. So seller wins, buyer wins. Just to give you a sense of this, last week we were at 10 solds. This week 9. Pendings 14 last week. This week 15, so slightly up. And then the number I'd like to see, we had 44 actives this week versus 32 last week. So nice jump up. When we look at days on market, we're at 12. So it actually dropped it was 19.5 last week. We're at 12 days on market, the median days on market. And then in terms of median price, nice to see 100%. So sold at list, most of these. Last week it was 105%. So there was a premium last week. Any other observations on this market this week, Darren?
Um, Gosh, as soon as I feel like it's softening based on rates, it just hit another high this week.
Mm,
It just is a little quick turnabout, and I'm surprised by some things that sell. So
yeah,
it's resilient. It's staying strong. Here we are hitting a big number of 7.65,
yeah.
the highest number we've seen in, I think it was 19 years.
Mm,
Um, it's floating down again. We'll
yeah,
see if it continues to float down.
yeah,
Uh,
yeah.
so
Well, it was odd for me, when I looked at some seller wins and some buyer wins this week, out of the nine, the four that I picked, they were all kind of weirdly reasonably priced. It was neat to see.
I
There's
felt that
usually these
too.
extremes, but yeah,
Yes.
there weren't. Yeah.
Yeah.
Okay. Well, let's go ahead and start with. Bear with me, guys. Um, yeah, we're going to start with Griffin Avenue, 3727 Griffin Avenue, and this started at 1,149,000, and it ended at 1,360,000 for 211,000 increase, 118% of its list price, and it took 15 days on the market. So, bear with me here. Okay. So, I think we actually featured this a couple weeks ago when it first came out.
Yeah.
Okay, so so let's go ahead and do the numbers. 3727 Griffin Avenue. This is Montecito Heights. It's a 3-bedroom, 3-bath, good size, 2,368 square feet of living space. Sold for $1,360,000. 7,200 square foot lot. It's a nice sized lot. 15 days on the market. And as I said, original price was $1,149,000. This is brought to us by Deirdre Solomon and Shannon Reed. And then on the buy side, Fonvu and Deirdre Solomon. So congrats to both buyers and sellers and their agents. What did you think of this one, man? I wrote some notes.
Well, I did think it was underpriced.
Yeah, absolutely.
It had a lot of exterior charm, some good interior original charm, and
Yeah,
some nice updates, and a lot of
yeah,
square footage.
yeah,
Um, Exterior work done, so you have that inside outside connection. Feels good to move in and out. Just
yeah,
kind of had it all. Griffin's a little bit of a
yeah,
busy street, but it's set back from the street, so
yeah.
um,
I put, if anything, the downsides were the street, maybe the neighborhood there. There wasn't a lot of, let's say, barrier or privacy to the
mhm,
front. That could be
mhm.
added. And then I forgot about the freeway. The freeway is not too far away either, the 110. So, but
Yeah,
it
I
looks
think
it looks buffered in some way.
it's far enough from the freeway. You certainly don't hear it in Griffin.
Yeah,
But yeah, just it was underpriced. It's a big house.
yeah,
It's and super nice. So
yeah. Okay. Well, let's go on to the next one. Stop this. That we're going to move now to Montecito Heights again. So this is 990 Montecito Drive. This started at a very reasonable, to me, 900,000 list price. It went to 920,000 for a $20,000 increase, 102% of list. And let's see, I think this was a pretty quick one too. 9 days on the market. Let me just bring it up. Okay. Let's see. And this one, I thought, I think somebody got a really good deal. Good for them. There it goes. Remember this one?
oh, I do for sure. This
Yeah,
was underpriced and it sold underpriced.
yeah,
Um, Unlike unlike the one we just saw, the one we just saw on Griffin was professionally marketed and prepared and nicely laid out with nice photos and a very close, similar neighborhood. This one's actually a little better neighborhood.
Much better. Yeah.
I think this is going to get remodeled and flipped.
I hope so.
Is
It looked
my
like a
opinion.
private party that bought it. I did look for that answer. So we'll see. It's 990 Montecito Drive. Again, Montecito Heights. It's a 2-bedroom, 2-bath, 1,560 square feet of living space. It's on, drum roll, 24,703 square feet of lot. Wow. And 9 days on the market. This is brought to us by Stephen Rood on the seller side, and on the buy side, Susanna Salcido. So congrats to them.
Yeah, that's
I
a
really look
great
forward to
buy.
seeing, right? So
Yeah.
good. Even just for the land. I mean, but you get some decent square footage in there too. It's not a shack.
You do. No, you're right. It could end up being an owner occupant, but there's a lot of upside here.
Yeah. What did I say? Surprisingly good price for so much land and square feet living. It's a fixer, but yeah, totally livable. All right, let's go to the next one. Under buyer wins, and again, very thin line when it comes to seller wins, buyer wins this week. We're going to 3818 Roderick Road. Yeah, Roderick Road. Trying to remember this one. This started at, hold on. Oh, this is really nice, this one. Okay, this started at list price $1,729,000, a reduction to a sold price of $1,710,000, so $19,000 reduction, 99% of its list price. And let's see what people saw here. Okay. Yeah, there it is. Okay. Okay, 3818 Roderick Road. This is Glassell Park. 4-bedroom, 3-bath, 2,705 square feet of living space. $1,710,000 was the sold price. 6,380 square foot lot. 26 days on the market. This is brought to us by Steve Sanders. And on the buy side, Shelley Aronson and Valeria Leninger. So congrats to everyone. I couldn't find much wrong with this house, Darren.
Yeah, it's kind of got everything.
Right?
Really does. Has nice patio living views, good indoor outdoor flow. It's got a lower yard, which also looks super nice and maintained. Big master, walk-in closets, lots of light, and it's just a lot of square footage. It definitely seems like a really great space.
So I did put I looked a little bit closer on this. So yeah, good price for square feet. I thought nice pocket neighborhood over with the quiet neighbors over by Forest Lawn. But there's a development, where that LDS Mormon church burned down. It's right there next to the freeway.
Got it.
So maybe somebody was trying to avoid the noise. Maybe the view will be changed in the future, but I still think they got a really good price for this and a really great house. So
Yeah, it's a nice place.
yeah. Okay, we're going to move on to the final buyer win, and that is, let's see here, York Boulevard. So 3732 York Boulevard. This started at $1,059,000, landed at $1,004,000 for a $55,000 reduction, 95% of its list price, 12 days on the market. Let me see what we got here. Hold on.
This is also another good value. I'm surprised this
Right.
one came down.
Yeah. Okay. Let this go here. 3732 York Boulevard. Again, Glassell Park. 2-bedroom, 2-bath, 1,602 square feet of living space. Sold at $1,004,000. 6,500 square foot lot. 12 days on the market. And this is brought to us by Barry Tognan. And on the buy side, Eva, Rose Burgess, and Tracy Doe. So yeah, what do you think of this one, man?
Yeah, I think it's going to be remodeled, is my guess. But clearly very livable and good spot close to, it's a little busy on York there. It is all residential, but it's a little
Yeah.
busy.
Yeah.
But it's a nice neighborhood. They're nice neighbors. And it's easy to get to everything, really easy to get to everything from there.
Right.
So,
You get to Glendale, right? You get to the other parts of the Northeast LA.
yeah,
Easily.
Highland Park, Eagle Rock, easily, very easily, Glassell Park.
Yeah.
So I think it was a good buy.
Yeah. And, if somebody does keep it, I think there's some original charm here in some way when you look at some of the rooms. But yeah, maybe an ADU down below. You see that garage below.
Absolutely. Yeah.
Very cool. Yeah. All right. Well, great. So that concludes solds and the local market in the last 7 days. Darren, we now turn to your new listings in the last 7 days. What do you see out there?
Let's do 1518 Lakeshore Avenue.
Okay. Hold on.
This is a home I had listed many, many years ago.
Uh-oh. Okay. Hold on, guys. Okay. I'm sorry. Give me the address again.
1518 Lakeshore.
Okay. Lake. Okay. That's an interesting picture. Let's see. All right, let me go through the numbers here real quick. 1518 Lakeshore Avenue. This is Echo Park. 2-bedroom, 1-bath, 910 square feet of living space. Active on the market at $719,000 list price. Small lot. Wow. 1,670 square feet. And let's see, open houses are planned for, Saturday and Sunday, 1 to 4 p.m. Been on the market for 1 day. And this is brought to us by Natalie Stern-Traben and Joseph Kern. Wow.
Yeah,
Slumming it in Echo Park. All right.
It is it's a funky part of Lakeshore. It's a little section of Lakeshore where the street splits up and down. It's narrow. There is no off-street parking. As you mentioned, it's a super small lot. It's 1,600 square feet. The woman I worked with many years ago, Tessa, she did a lot to the house. And it's charming. I mean, you're getting the most out of this house that you can get. It's underpriced at $719,000. It's not going to sell for that price.
What do you think it'll end up? $1 million, a little over $1 million?
Maybe not. Really, it is
Just
limited.
under.
This has to be somebody that doesn't have a car or is just willing to deal with street parking. But there's nothing available in this price range. So
yeah,
somewhere in the 8s at least. Maybe
right. This is
the
competing.
9s.
Yeah, this is competing with a condo or a small lot.
Yeah, and I'd rather have this than
This
a
is pretty good.
condo. But you don't get off. You don't get off street parking. You get everything else. So there are people out there without cars. That's the easy one. That's the easy targeted buyer. But even though it's just willing to deal with it to get into the neighborhood because it's a good house.
Yeah.
So this will go fast.
I like that one. Yeah, I like that one. Okay. What else do you see out there?
2249 Loveland Drive.
Okay. Okay, 2249 Loveland Drive. This is Glassell Park, very famous this today. 4-bedroom, 4-bath. Wow, 1,986 square feet of living space. listed at 1,495,000. Great view. Lot is almost 5,000 square feet. And let's see here. 6 days on the market so far. This is brought to us by Hannah Asboy and Tracy Doe. So yeah, what do you have to say?
It's a great house. It's a lot of square footage. It's got nice
Yep.
views. It is presented well. And, I would say it's underpriced, which is typical.
Yeah.
With this agent, not as much as normal.
Yep.
But I think this will also go fast.
Right.
It's just
Well,
a
if we
great house.
start looking at the general per square foot, it seems everyone's trying to reach to that 1,000 per square foot. Yeah, this could push up for sure. But
Yeah,
very
I
nice
could
house.
see it going in the 1.7 range at least.
Yeah.
Yeah.
Yeah. Cool. Nice. All right. What
There's
else
some
to
days
say?
it feels like it's a single agent market.
Oh man, we get our licks in.
Every now and
Okay.
then, man. Every now.
All right. Anything else to show?
I do have one more. 3760 Latrobe.
Oh. Why did that sound so familiar to me? Is it just the Latrobe part? Let's see. I don't know.
It's the one we were talking about.
All right. Bear with me here, guys. Okay. Oops. Huh. All right. 3760 Latrobe Street. This is Montecito Heights. 2-bedroom, 3-bath, 1,644 square feet of living space. On the market at $1,099,000. Lot size 8,763 square feet. Open on Sunday, 2 to 4 p.m. Let's see, 6 days on the market. And this is brought to us by Courtney Picard and Joe Reichling. That was really fast. Good for them. Yeah. What do you have to say? I see our client's place from one.
Yeah. Extremely underpriced. Again, they didn't do much outside. They didn't do much to improve the curb appeal. I was expecting that. But the inside looks good.
Yeah.
It's such a lovely neighborhood up there. So this should sell fast. It's in many cases an underpriced neighborhood. We had the one earlier on the sold that sold for $900,000. And there's just great value up here. There's still great value.
Yeah.
So
yeah, I'm surprised they priced it so low. I don't know if that's their habit, but I don't know if they just don't know
usually
the
they're
area,
a
but-
little closer. I would have thought this would price more in like the 1.3 range.
right. Very
Starting there, and
Yeah.
maybe it bumps a little from that, but yeah.
Yeah. Okay. Well, that was a good one to end on. Okay. Well, we are done, I believe. Darren, anything else we may have missed? I think we're
No,
good.
we'll post that video. I think that's something we should.
Yeah. I'll put it on our blog for sure.
Yeah, we can
Oh,
start.
well, I'm sorry. I guess I was going to say, we are preparing a home in Mount Washington. Very nice 3-2. And we hope to have it out next week. So stay tuned. Very nice home. That's it.
Yeah.
Bye, guys.
Bye bye.
Have a good one. See ya.